Hello, Kristen here, and just before we jump into today's episode, I just wanted to give us a little disclaimer to remind everyone that this is part 2 of our episode with Matt Tucker from Creative Crunches. And if you haven't listened to part 1, I would definitely implore you to pick up all of the tax gems of wisdom that were in that one before launching into this one. But I'm not going to tell you what to do. If you're ready to jump into part 2, here we go. Enjoy.
Yeah, and look, one thing kind of running an accounting firm now, as I said sort of earlier, I think in the podcast, that it's easy for me to say this because I've been trained on the technical aspects of bookkeeping and accounting and specialising in tax. But over my particular career, like I was an employee once upon a time as well, having just regular salary. All the drama was handled by my dad, who I work for. So I didn't have to worry about all that. The running the band accounts and being a little bit of a freelance muso on the side, that was my first inkling into like the practicalities of that. Yeah. And even just trying to collect, when we were running the band, because obviously that was the thing I could do. I couldn't write songs. I could write drum parts, but I couldn't write songs, but I can actually do the books. I'll put my hand up to do that.
I think every band needs somebody like that.
Someone in the band needs that skill. And collecting, I remember like trying to collect actual records from the rehearsal space that we used to use. It was so, oh my goodness,
it's such a I scratch my back, you scratch your back, you scratch mine.
Unbelievable. But so I have had practical experience on it's. Sometimes it's easier said than done. Yeah. But all these years later, moving out of that salary position into owning my own firm, all of these same principles affect me. It's not a creative business necessarily, but just from an actual business point of view, tax is something I've got to contend with as well. I've got to be doing the right things with employees. I've got to be looking after the superannuation. I need to know what my cash flow is. Yeah. I bang on about these sort of principles because I need that clarity myself. If the thought of me trying to do my business once a year, I would not do it. That keeps me up at night as well. Yeah. So, that's why I bang on about that being the real key to demystifying everything, because I've learned that myself over time. Every single morning, I know it's awful. Just could we just do it maybe once a week, Matthew? Is that all right? So okay, well maybe start on the week, but I can even a week I wouldn't be interested in. I think that would be actually hard. I find it so much easier to do it every morning. Literally get in early before the office phone lines open, before staff arrive. Yeah. That's my little time. And it's only like 20 minutes, like 15, 20 minutes tops. That's all it takes. It's not actually a long time, but it just gets it done. It gets it squared away. And it means that I can just go into that computer program any day of the year and run whatever report I want to give me the information that I need. Yeah. So there's no surprises.
Amazing. I think that's the thing, is that the smaller the task, the easier it is to accomplish. So if you journal in the morning, you play video games, or you watch YouTube, just halve that time and do some accounting work with it, and then
make that the bonus after you've done the nitty-gritty.
But if you are watching YouTube and it's got a professional angle, be logging that usage of the time, and
if you're a streamer, make sure you're logging the video. Like honestly, it's like every little bit counts, right? So I guess our last point is that claimable things is also personal, but if it applies to the running of your business in some capacity, log it. Keep the receipt.
You know what? If you log something that can't be used,
then at least
what is it hurting?
Yeah. Better to have it and not need it than need it and not have it.
Yeah. Well, as I said, like when I was in the band and doing all of that stuff, we would go to shows. We would go to festivals, and I loved going to festivals like anyone else. Of course I had a personal, enjoyment out of it, but I wouldn't tell that to an ATO auditor. It's
we'll just censor this bit.
and the reason why I can get away, if if any of those days were audited, I would have been able to really get away with all of that argument, because for the festival, it's like the ticket was there, you know, the travel to and from the venue was long. You know, down the Gold Coast when Big Day Out was on, we do that every year, and learnt very quickly that if I just had accommodation down, it was a lot easier to just have some safe accommodation than trying to run back, you know, after a day in the sun. You know, so accommodation and actually staying down there became part of it. So driving down, driving back, accommodation costs. Now I'm away from home overnight, which means the travel is, it's like deductible. The food is deductible. It's not just sustenance locally anymore. It's I'm incurring breakfast and lunch and dinner because I'm away from home, and I'm keeping all of that stuff. So, you know, I to be able to go to an auditor, the auditor might have the first reaction just like, you're not going to go and claim your big day out. I'm just like, yeah, I am. And here's all of the receipts, because the person who goes down to the big day out for just pure pleasure and is not thinking about any of those professional development aspects, they're not going to keep any of this stuff. It's not forefront of their mind. But for me, it really is. So that's why I'm collecting it. And I still remember one of those years where the festival had finished and we'd all gone back to the apartment, you know, that I booked so that I had the invoice. And I was like writing down in my diary, right, that I'd spent $6.50 on the Spud guy with like a $2.50 water or whatever it was. I mean, that's what I was writing down. And one of my friends just looked at me and just cracked up. It's just like, you're such an accountant, you know. and the other band members were in that room. And, you know, and he's just like, all of you other fellas should be doing this as well, you know. You know, and it's like, well, yeah, they should, you know. And it's a bit nerdy, but I had all that stuff at the end of the year, and it went into my tax return, and I claimed it. You know,
we go to a lot of premieres, and like we get to see a lot of musicals as part of, like, under the PR banner. We get invited to these things, and my daughter's always like, "But you're just going and having fun." I'm like, "No, but baby, I'm working. This is also work. Like, we are there to work. We're there to help promote this show." And so when I park, I just get my little receipt, and you know, we often have to wear specific things. And I'm like, you know what? I don't know if this is claimable, but I am keeping the receipt because I just don't know.
That's right, yeah. And I mean, look, that's probably a good example of one where, yeah, the ATO is they're super strict on conventional clothing.
Yes.
So, you know, the purchase of the conventional clothing is almost universally out.
Yes.
But there can be like little areas in the Tax Act where that stuff is deductible. So, you know, it could be that you've had a particular like award ceremony or something where you're connecting it, right? And you've gone to Mecca to be made up for the day, and had a hair up style or something. You know, I'm bald, so I'm sort of trying to use terms that I'm not overly familiar with here.
You're doing great.
I've heard people call it an up style. So, you know, but that's not you trying to just claim hairdressing and stuff through the year. It's just, that is a really deliberate thing where you've just been, so it's not conventional clothing, but it is on the cusp of those sorts of things where it's got a direct connection. I would allow that through. So, but it's a very, very tiny little example, you know. But that's what, I mean, look, that's the sort of thing that keeps people like me employed. The Act is massive. Like the Tax Act is volumes and volumes and volumes of legislation. And it's our job to sort of know where the little, the allowances are and what bits are not. But the name of the game for today's podcast, and you know, is teaching all of your listeners that you've got to get into those habits and start and think broad and learn over time where it can be narrowed and you get better at it. But the strategy is to think as creatively as you can, to be linking things all the time, because the more serious you are about your endeavour, the more likely it's going to be that you are spending money on it more regularly through the year. It's not that you're just spending money at 30 June. You're spending it all the time. So just connect it. Even if it's 20% or 50% of a connection, just be getting into the habits of documenting all that. Because the thing too is, like, as your business grows, the obligations increase with it. And if those good habits have not been learned, if your business especially experiences like really quick and like meteoric rise, where suddenly all of that responsibility hits you like a tsunami and you're not ready for it, it can be full on, you know. I mean, maybe you'll just have to learn quickly, but you
like
can.
You get a good contract and everything changes.
Yeah, that's exactly right. So, you know, the time to really just hone all those skills is like when you're starting out and those obligations aren't, you know, super onerous, that's the time to be building all of these good little systems and just like learning as you go. And we all do, you know. I've done that as an accountant as well. You know, I look at bigger clients now. I couldn't do that when I first started. You know, I've had to learn how to do that over time and get better at it. You know, it's exactly the same. And even my processes to this day, I've learned how to do that because I cut my teeth learning that when I worked in my dad's business because, you know, he's probably not as OCD as me. I can probably say that quite safely on this podcast. If he ever hears this, then I'll just go, is that a true statement? He's like, absolutely, it's a true statement. So I'm definitely more OCD than him, but I learned through, you know, sort of managing his business and the systems that were in place. It's like, oh, how could I shave that or shave more time, or what is there a piece of software that might be able to do this for me, and just learning through experience on how to just get better with that sort of stuff. You know, because I knew one day it's one thing to be in the bosom of your old man's business and being an employee, but it's like there's going to come a time when I'm going to have to do this, and if I don't have someone like a manager like me, I am my manager, I'm not going to have really that backup. So it's going to be incumbent on me to have these systems. Otherwise, I'm going to be drowning in a lot of paperwork, and it's just not going to feel controlled, and I'm not going to sleep under that kind of landscape. So you just get better at it. Got to start somewhere.
Just like everything, and it's never too late to start. It doesn't matter how long you have been doing this. We will get better at it. I promise it's going to be great. I've learned so much today.
So when somebody's coming to you, they've made that first appointment, and they're sitting down for their first, say, meeting with you. What do they need to bring you so that you can understand them as a client?
Yeah, so we basically get them to fill out questionnaires. So, you know, is car something? Have you kept things in spreadsheet? Have we got access to Xero or MYOB, or is it in accounting format? Is it just spreadsheets? We just get them to give us anything that they've got, because when they first come to us, we don't know how much they know or don't know, or what systems they've been like put into. So we see everything, but yeah, we just get a full landscape as to, you know, how have you kept all of your records? And if you haven't kept records, well, do we send them back on a bit of a fact-finding mission to go back through bank statements and start collating things in whatever way they're legally allowed to? Definitely start to get them into like better habits if we can see them. A lot of the time, if there's a car, like a logbook hasn't been kept, so we can have conversations with them about, do you want to just take this on for a year and just keep one and keep all the receipts and just give it a shot, because until you've gone through and done it, you probably don't know how much your car's even costing you, you know? So it might not be that going down that whole road ends up being something that they'll keep doing if it turns out their car's not used a huge amount. There could be other ways that we would claim the car without that being so onerous for them. But until they've gone through the actual exercise, they don't know. And that's the thing for us. It's just the more you do, then the more you'll be in a position to actually really truly minimise the tax bill. All the substantiation is your friend in being able to minimise and just capture all of those expenses so that full picture is actually in front of you, and you can give that through the tax return to make sure the tax is low as possible. You know, because again, when I was doing it back with the band, and like all of those band members we were all in the same boat. We all sort of had our day job and doing it, moonlighting, and we're all the same age, right? So we're all kind of in the same place, like career-wise and salary-wise. And for a little time there, I was looking at all of those tax returns. So I had mine to do, but I would look after the partnership tax return and the fellas tax returns. And it just always struck me each year, just like there was definitely an OCD candidate with all of these receipts, and then there was like a different version with the more haphazard approach, you know. But considering we were all on similar salaries, like the difference in the tax refund for me at the end of the year versus the others was palpable.
Oh, you know, because you can actually see what difference record keeping has made.
Yeah. I could see it, you know. And that's lucky. I mean, that's a real sort of bird's eye thing and a privileged position for me to have been in, where I've had direct exposure to really see the results of good habits in this way versus there are things accountants can do in the absence of record keeping. We've got some room to move with things, but it's never going to be as good as like the actual real picture. You know, and those sorts of differences in tax refund back then, you know, that was the sort of thing that allowed me to go into Cold Gillies and buy an extra snare drum or go and buy a whole bunch of new cymbals and just, you know, not have to put it on a credit card, you know, not have to go into any savings that I might have had. It was just, here's a tax refund that's come through, you know, and it might be like $2,500 or $3,000. It's like happy days, you know. That's what I'm going to. Well, this is the activity that generated it for me. I'm going to reinvest the money, and that's what a lot of artists would do.
And take the receipt and put it in for next year.
Yeah. I mean, I remember going up to one of the salespeople one year where I'd bought a whole bunch of equipment. The rules are a bit different now, but back in the olden days when this happened, you had a threshold for being able to buy equipment up to a certain level and just deduct it all up front without having to put it on a depreciation schedule and claim it all over time. And that threshold used to be really pretty low. It was only like $1,000 back then, whereas now it's sort of up at 20 grand, you know, and through COVID, they did away with that limit. So a lot of people that have come into this over the recent past are more used to just being able to claim their assets without anyone really asking them anything about it, you know. But once upon a time, that threshold was really low at $1,000. So I went into Cold Gillies, I think, with roughly about $3 grand to spend, and the whole bunch of the equipment was under this $1,000 mark. But the snare drum I was buying was over, and it was about $1,200. And so, but they would always do discounts. You know, you rarely ever went there and got charged full price for anything in those days. They'd always take something off. So I said to the guy, hey, can you just do me a really good discount on the snare drum so it comes under $1,000? I don't care if you don't give me a discount on other items, but I just want every single piece of equipment in this to be less than $1,000. You know, and that, it was just tiny, but it's just, I just want the tax deduction now.
You had the knowledge.
It was just that just like little sort of tips like that. People can kind of get away with more now, and so I guess that the hints and tips are in different places. But I guess that's where your accounting specialist is sort of who you want in your corner, unless you're so motivated by this talk today that you're going to go out and become a pseudo specialist and start trawling through the web pages of the tax.
You just like all of our listeners like reading through the tax code to try and figure out what to do.
What they'll be doing is trying to find Matt's email address.
Probably one little thing too, right? Because we've been talking a little bit about people having like that day job outside of the creative space, or look, maybe your day job is actually still in the creative space, but it's the key is that it's an employed position where you've got that salary and that regularity, but then there's this freelancing that's happening all in and around it, and especially where those roles have got some sort of overlap. If you are working in the industry as an employee, how do you separate these things? Where does the freelance kind of sit with the salary? I just say to the listeners, because it is really common that we find people that are hustling on the side and they've got that day job, whether it's in the industry or not. always think about the salary from the employer as being the bedrock income that you've got, because a lot of the time people are going into that employer and they're ticking off on the employment declaration that they're going to claim the tax-free threshold from that person, which means if you're claiming the tax-free threshold from them, they're not withholding as much tax from each pay, because they're expecting that the first 18,200 of income that you're earning each year, which is not subject to any tax, is being earned from them. So they don't really need to withhold much. And that's fine, so long as that's the only income that finds its way into your tax return. But if your real position each year is that salary position plus all of your extra freelance stuff that's coming in and around the edges, there's a real question on how is that freelance business going? Because if it's profitable and it's adding to your overall income for the year, it is adding onto your income. Think of it as it's adding on extra to all the salary, which is the bedrock. We always get clients to think of the artistic stuff as being separate and additional. And because we've got a marginal bracket system, so the first 18,200 is tax-free, but once you start to earn above those levels, taxation starts to creep in. And the more you're earning, the more the tax rate starts to climb as you go through these brackets. So look, in these days, the brackets are really, really elongated. So that's a good thing. From 18,200 up to 45,000 in income is one whole tax bracket. And then from 45,000 to 135,000 is another one, which is huge. Now, when
tax bracket.
It's massive, and that's good, because it becomes a lot easier for people to be sort of looking at the freelance activity if they're really looking at that tightly, and they know that the salary is more regular and a bit of a given. They can get a fair amount of clarity as to what they're expected, or at least how their income is moving through the year. At the end of September, it's too early to really know how the year's going to play out completely, but if you're constantly looking at all this stuff, then at September you will have an absolute clear picture of where you are for the first 3 months. It's the same at the end of December. So as the year just goes on and on and on, you're getting more and more and more of a clear picture, and the end is coming to closer and closer, where you will be able to estimate where you're going to land for the entire year. And if you're looking at your income moving from somewhere between 45 and 135, then all you really need to know is, how much is my business earning in terms of a profitability? Because it's all happening in this particular bracket, and that particular bracket is 32%. So you know that if you can be putting 32% aside of your profitability, you'll be fine. It's just, but for you to know what that amounts to, you've got to have the data, right?
Exactly.
Once upon a time, those brackets were super condensed, and so people were moving through those brackets, a lot more rapidly. But yeah, so one good thing is that it's elongated, but you should always be kind of thinking of that freelance stuff as being on top of, and just being aware that if the employer has not been really withholding much tax for this base level of income, and they've sort of exhausted your tax-free threshold, then all of your, this is what kind of can make it a bit difficult, all of the freelance stuff is really getting exposed at the pointy end of where you are in the tax brackets. So it's asking the freelance stuff to sort of do more heavy lifting on being disciplined to put that tax aside. That's where people get, I guess, just caught short.
So that employer is doing, that core tax, and you as an employer of yourself need to put the rest aside for your business.
But if you haven't claimed the tax-free threshold, say, from your employer, then it will be a little less, maybe heavy lifting from your freelance stuff,
100%, 100% right. And we've found clients in the past where they're really unsure what they've ticked. So it's maybe just been a form that's been put in front of them, and they're not sure what they've actually ticked.
Because everyone goes, oh, that one looks good. Just ticks it off.
Yeah. Or the employer will just, if there's questions, often the employer will just say, oh, no, it'll be tax-free threshold, you tick that one.
Yeah.
But they'll be telling people to do it without maybe necessarily knowing what that person's full kind of situation is.
Because they can only see the scope of their job. Like
that-
this is our business, you work for us, and this is what people usually do. They don't know that you've got a whole other life.
And what about
Side
your
hustle.
example before where you would just go in with, 15 different payment summaries? So like in some industries, you'll find that the employers are much more on the other end where they know,
Yeah.
like film and TV is massive for this, where they just know that they're constantly employing people who are working for all sorts of production companies all the way through the year. They are invariably taxing you heavily when
Yeah.
you're working for them. A lot of the people in that industry will actually get taxed so heavily through their year that when they do their tax return, it's almost like none of the employers have done tax-free threshold for them.
Yeah.
And so they're invariably on quite a large refund.
Yeah.
I
They were
mean,
great years. I really did.
yeah,
But all of those were like ads or extras work, and they would all sit with us and say, now, just a reminder, and they would remind us about those boxes. If you've got another job, you might have already ticked that. Make sure you tick the right one. They were so good about it. A lot of those places that we were going to were like, just reminded, like, this is your second job. You need to be clicking that it's not the tax-free threshold. And so, yeah, you cop, a chunk of that, but at the end of the year, had a great refund coming to me.
it's good. It's over the top. A bit better to be in that position than
The opposite.
than the opposite, right? And the help debts sort of intertwine with that, where you might be going to an employer and ticking off the right boxes and claiming tax-free threshold and letting them know that you've got a help loan in the mix.
Yeah.
But if your salary levels with that employer on their own are not really tipping you into help repayment thresholds, you'll find that that employer isn't really deducting anything extra for that loan at all because they're not really required to. The pay-as-you-go withholding schedules are designed to only withhold extra if the salary levels are high enough that it should be withheld. But
in that one job.
in that one job.
Yeah.
And that's the problem that a lot of freelancers will find themselves in, where that job might not have been doing it, but once all of their freelance stuff is added into the mix for the year, they're suddenly in a help repayment band,
Yeah.
and the helpers repayment band is saying, we would like an extra percentage across your entire taxable income
Yeah.
in a help repayment, and no one has planned for it.
No.
So I've seen that a lot of times.
Yeah.
And people can be forgiven for being caught out on that because they're trusting the employer's just sort of taking care of things, and really the employer is taking care of things the way they're meant to. They're not.
They're not employed to take the rest of your tax stuff.
Exactly right. And that's where that, all of this stuff that we're talking about today, it just becomes so incumbent on freelancers to take charge of this and to get the clarity, because if they do know that their freelance activity is adding to this and they're looking at where they're expecting to land in a year, and they're seeing themselves move into a potential help repayment band, and that's going to equate to XYZ extra tax. The question is, well, where is this money? Have you got it put aside? Can you plan for it? It's very real.
Yeah.
It's huge, and I get asked all the time, oh, why did you pay your HECS debt? That's a debt that you can just leave, right? It's one of those debts that are fine. And I was like, I was a performer for a charity, so fringe benefits as well as freelance work can come tax time. I was like, it's just better if it's gone. It just makes life easier. It simplifies my life. It's also the only debt I had. I would rather it be paid off so that it helps in other aspects, loans, house deposits, all of those kinds of things. But I would look at my tax return and just be like, it just needs to go. It's easier. And I know it again.
Simplify.
But it's going to be different for each person again.
It is different for each person. The other thing too, I think, we should spend, you can edit it out, or, I don't know how long it's all going to end up being, but there's probably one topic I think for freelancers that it's probably the one topic I spend most of my year talking about, and that's the pay-as-you-go installment system. So once a person's, I guess, affairs overall, if you're putting through a tax return where the amount of income that is coming through from your freelance activities, where you're the one responsible for withholding your own tax and putting it aside, no one else. It's what they call untaxed income being declared in the return. So, and freelance, so with the salary's got an employer that's tax withholding already on your behalf.
Yeah.
But the freelance stuff is no one's deducting that tax on your behalf. You're having to manage all that yourself. So the underlying nature of that income is that it's untaxed. Like at the source of that being paid to you, no one's withholding tax at that point. So it's untaxed income when it hits your tax return. And the tax office, when they see a taxpayer that's got that element to their life, and it results in a tax bill at the end of the year saying, you've earned 20 grand from all of this activity, you've paid no tax on it so far, so here's the bill. As soon as that sort of happens, the next thing people will find is a letter from the ATO to say, hey, you've been placed into this pay-as-you-go installment system. We want you to start paying installments of tax. And it's based on an assumption that your next year or your current year is going to look like the one that you just submitted.
I just got that letter. Knowing that this year is going to be vastly different.
It will be. It's a massive change.
Yeah.
And so the thing that catches a lot of people out is that if you're taking a while to even lodge your tax return, say you know instinctively that a bill is going to arise from this return, which means you actually put off lodging it. By the time you lodge that tax return and the tax bill crystallises, and the ATO says, well, it's kind of time to pay that maybe right now. Depends how long you've left the lodgement of the return as to how long they'll give you to pay it. Straight away, they'll write to you to say, well, we think your current year is going to be the same. Now, that may or may not be the case, but they're going to write to you and they're going to put you in that system, and you don't have a choice to be in or out of it. You're in it now. And they're going to start issuing you with these installment notices every quarter and all they're really saying to you is, look, tell us if you're still earning freelance income. And if you are, we're going to get you to pay X amount of dollars or an X percentage rate on those earnings, so that you just try to formally start putting some money aside in expectation of another tax liability. But what's happening to people in practice is very shortly after they've just been issued a tax bill for the year before, they're suddenly getting a requirement to put aside tax for the current year, and that current year may almost be finished in its own right. And so that system can suddenly hit people with almost having to put aside or pay last year's tax, number one.
Yeah.
If that money is not available, then you're having to plan as to how to pay it at the same time that the ATO is asking you to pay similar amounts of tax for the current year.
Yeah.
And you can imagine that if you haven't planned for the previous year, how on earth, where's the money for the current year?
Yeah.
Suddenly you've got effectively 2 years worth of tax that the ATO is now on your back to, for you to pay. And if this is all happening at the end of, this year number 2, you can imagine that you're about to head into year number 3 with you on record as being under this pay-as-you-go installment system, and year 3 starts beginning. So you've got a prior year hitting you. Your second year has almost finished and they're asking you to start paying pay-as-you-go, but you haven't put anything really aside for year number 2 either. So you've pretty much got 2 years that are going to crystallise at one point, and they're getting you to pay instalments for year number 3 as it gets underway. 3 years worth of tax at one hit for any person is crippling. And that is one of the biggest things, and it is far more common than you would think as to people being caught out with the pay-as-you-go system in exactly that circumstance where it's 3 years. So suddenly,
a spiral of just
it is. You can imagine the second year's tax return. No one wants to file it. They're still trying to just pay off the previous year. They usually try to keep year number 2 somehow just off record because they're dealing with the end of year number 1, and they know that year number 3. They're out in the open now, so the ATO is definitely going to be sending these quarterly instalments for year number 3. So they might have, excuse me, an ability to plan for the end of year number 1 and plan for the year number 3 they're about to get into, but there's this missing year number 2 just quietly in the background that's going to come on record at some point. So it's really crippling. So again, it just is all about trying to be on top of all of your freelance activity as fast as possible, to be putting this sort of money aside in expectation so that when you finally do get put into this program, you jump on it and you're on the front foot. Easier said than done, of course, but once clients are in that system, the thing that a lot of them will struggle with is just the sheer variability of each quarter. So I just say to the listeners, just always be mindful that they do try to make the system as flexible as possible because they do realise that your lives are flexible. But all they're trying to say is, based on the most recent information that you've submitted to us, if your life is still the same, if you pay these amounts of calculated tax, then that should be enough. And if your current year is actually tracking similarly to that prior year, you will find that if you just sort of stick to what they're telling you to put aside, you should be mostly protected. Unless you want to go down the whole road of just analysing your business and knowing exactly where you do stand. But if you've got a quarter where you haven't really earned any profitability, then you should be in a position where you can vary those instalments to say, well, look, I'm not going to give you anything this quarter, or I'm going to give you less than what you're asking for, because my real position is not quite where it was last year. But it can work the other way as well, where clients can feel they're in a false sense of security where they get the pay-as-you-go notice and they just pay it, but it's based on last year's information. If your business is going gangbusters and it's shooting for the stars, your upcoming tax bill is going. It's going to be something, but it's not going to be enough. And so, again, in my very own business, I am constantly looking at the profitability of the business as I go, and when each quarterly BAS comes up, the GST is what the GST will be. That's based on transactions, but what my pay-as-you-go instalment will be, the ATO is always just asking me to put something in the coffers based on my prior year. But what I'm always doing is looking at the actual profitability on the real numbers, and because I operate as a company, which is just a flat rate of tax of 25%, it's kind of easy because I can just say, well, here's the profitability. I know the bill is going to be 25% of that. I will give them 25% of that profitability, but I won't give them a cent more. And when I get, so at the end of September, that's the first quarter, still a long way to run yet. How's the December quarter gone? So at the end of December, I'll have a look at the profitability like up to December. So the whole sort of half year, July to December. What's 25% of that? I know I've already put aside some of it in September. I will top up the rest of it now to December. But because I'm always calibrating it, as I get to March, it's put aside. And as I get to June, that's really the last quarter of the year, and I'm taking that final kind of calculation, putting it aside with that quarterly BAS. And so I've got clarity then that the amount of pay-as-you-go instalment I've been giving them each quarter is just exactly where it needs to be. Again, easy for me to say, I'm a bean counter, I get off on being able to do things at this level, even for myself. Not everyone that's listening today is like that. I appreciate it. But
it goes back to that, like you talking about doing it as you go. Keeping an eye on it, making sure, just like if you're checking in once a week, if you're checking it every day, that you're actually keeping on top of it. You're making sure you have full eyes on your business, and that's going to help you in the long run.
I think
it does. As a business owner, you know, it's just a great skill to learn. I think
Truly.
It just does.
It is good. And I guess then my question is for my own personal experience of this new system is for the first half of the year, those installments are incredibly accurate. But currently the projects that I'm doing next year are not as much or as frequent. And so the next half of the year is quite empty, where those installments will probably be way too much. So is the recommendation because who knows what's going to happen? I could get a call tomorrow and be like, hey, we need this gig for this. Is it better to pay those installment and have paid too much at the end of the next tax year? And then what happens next if you have?
For personal experience, I would say yes. It will be.
It's always better to pay more.
It's always better if that money is there when the tax bill hits you. I know from experience that bothers clients a lot less than the other version. Yeah. You know, I see what stresses clients out, and it's being on the other side of it. And that is just so common. See, that's what makes the whole pay-as-you-go landscape, I think, tricky for clients, because they're naturally apprehensive about the tax office. They're getting communication from them to go, you owe this.
Yes.
You know, and if you can imagine, it's just like that's apprehensive, that's scary. But if they've got clarity on where their business is going, they will know instinctively what the business requires, and whether what the ATO is asking for is too much, or, as I said earlier, or sometimes too little. Because I've seen it work the other way, where clients have just got in a false sense of security that that's all they told me to put aside.
Yeah.
I'm like, but only based on the information that they've got at hand. You know, it's incumbent on you.
And once again, you're the one with eyes on everything. You can see everything that's happening. Yeah. Your employer in this part-time job can only see their slice of the pie. And this one can only see their slice of the pie. And the tax office can only see what they've done last year. They can't project for you. They can't see what's coming up for you. You're the only one that can see all of that.
Yeah.
So the power's in your hands.
And truly putting that money aside over the last, 3-4 years has changed my life. And when I get an invoice, or when I send an invoice, it's gone, because I'm like, I know that I have at the bare minimum exactly what I need. Whatever then I claim / my day job's tax withholding changes things, I know that there will be enough in that account, and that stress is gone. It's annoying to look at that invoice amount and be like, okay, well, I'm putting this percentage here and that percentage is go there, and so I'm left with very little. Yes. But at the same time, it's better to do that now and still be able to pay rent and bills than to get to tax time and be like, where am I going to find thousands of dollars?
And when you're doing that, you're doing the same thing that you would be doing in any other job. It's just that you're seeing the back end of that. You're seeing the gross amount. You're seeing the bits before the tax goes out and whatever. You're just the one doing that.
The other thing too, I think, which is a little bit of an adjunct to all this as well. I don't think people in the main do a lot of budgeting, and I know it's hard in the creative industries because it's such a roller coaster. I'm the first person to admit that when you've got regular income, budgeting is actually pretty simple.
Yeah.
It's so much harder when things are up and down, but if you are concentrating on just trying to wrangle it as best you can, and knowing where the business and the taxation is at, and putting the money aside, if you're doing that, then you've got a deeper understanding of how much you actually have to play with in your personal life, and the tendency for people to collect the money from the invoicing and go, oh, my bank account's flush. Let's go and enjoy ourselves. Like, we're all human, but yeah, if you approach it the other way, where you take care of all of those business expenses and the taxation because you know it's going to hit you, then that really tends to leave you with the reality of what's left. Now that might be some harsh decisions as to how that impacts your personal life, and making decisions about cutting things out, and trying to hit savings goals or adjust your actual spending. But better to be doing that, and just getting through life a little bit more than the other version. I mean, you probably will have had a more enjoyable year, but it will bite at some point, because the tax will be real.
Full tax time.
Yeah, it'll be real. And definitely now, sort of since COVID, we've really seen a very marked shift in the ATO. They're having to collect a lot of debt, and I mean, I'm not really sort of like for them much of the time, but I do sort of like feel for them in like, how are you going to do this? Like, you've given a lot of leeway through COVID, and that's great. We all sort of needed it, but it's like this is always, even when it was happening, I kind of knew there's going to come a day of reckoning for this, where they're going to have to start clawing it back, and that's going to be
Something
difficult.
Has to balance it.
It's going to be difficult. So they're just, we definitely see that they're much more on the front foot now, with tax lodgements, things being overdue. If you're GST registered and you've got BASs, you used to be able to really get away with kind of lodging them a bit after the due date, and they might put some interest on the account, but they'd probably remit it if you sort of paid it. It was just a lot more lenient, but we've really seen that tighten up now. So fines for late submissions, if you're putting in requests for things being deferred, and if the history with the client if their lodgement history is not great, those things are getting rejected. So they're really starting to try to tighten their grip on that, to, I guess, almost like force the population to come along a little bit with them. So it's just maybe a little bit of a warning too. It's just like, look, some of their correspondence can be pretty bad and confusing, and blunt.
And blunt. I think very blunt.
So blunt.
I was like,
It's almost like that. We need to talk.
I know.
And
I'm
not
like,
give you any context, and you go, why do we need to talk? What have I done? What have I done wrong?
I promise, and I did everything I thought I was supposed to. It's like being called to the principal's office.
Yes.
Yeah, but then you're not going to be thrown in jail. They want the money first.
Yeah.
So the correspondence can be a little bit like that, but it's, I guess, our approach, because we deal with them all the time, is like, look, they're not going to put you in jail, but if the tax is there and it's owed and it's real and it's based on real numbers, it's not really going to go away. So everything still just boils back to all these basic principles, doesn't it? It's just get on the right sort of side of all of it, and all of the potential drama just kind of leaves your life.
Find yourself a good accountant, guys.
Yeah, that's our job. We're designed to try to help you through all of that. But it is a landscape, and I can definitely tell you from sitting on this side of the desk that, I've got clients that I've had for a long time now, and they've taken on board all of this stuff, and they've got better at it through the years. And the conversations are easier. It's a lot more forward looking. There are no surprises, which means, there's just not really angst in the relationship anymore. It's just different.
You can trust them to do their job. They trust you to do your job.
That's right. And you can see that they're more at peace with all of it. And it's like anything. I mean, this is just my area of expertise, but I'm the same if, I'm not a lawyer, but I surround myself with good lawyers who can help me with those aspects of my business. I want good contracts. I want human resources to be, properly managed. I want all of the technology to be in place. So, you just got to learn those little bits and pieces as best you can.
I'm a big that's their job. My job is to figure out my piece of that puzzle, like what I can do to make their job easier. So this is what I need to do so that they can do their job.
Absolutely, yeah, absolutely right. And it's just, it's so much better when that is there. I've got some clients where I would talk to them every single week, easily every single week, multiple times a week. And as I say, sometimes it's like they wouldn't go to the toilet without asking, and
can I afford to do this?
Yeah, but it just makes everything so much better because none of the conversations are about this is blown up or this is something that's happened that no one's planned for. It's always about, Matt, I've got something coming up and it's X, Y, Z. How's that going to get coded? Or, should we be structuring things this way or another way? So they're always on the front foot with those things.
More
and you can just, if there's going to be a drama or, some sort of pitfall, you are given the opportunity to drive around it, It's just much better that way.
Yeah, and surrounding yourselves with the resources that are necessary. And if you can't necessarily afford to go to somebody else, like we've said, there's lots of apps that can help you along the way. There's great banking apps now that are helping with budgeting if that's what you need. Other than Excel and MyOb and Xero, are there any other apps that you would recommend?
Oh, look, I don't like to sort of dictate it too much. People will find things that work for them. My personal experience with the actual accounting programs though, I still think my solid recommendation would be Xero. And I'm old enough now to have grown up with that piece of software from the beginning. I know what life was like pre-Xero. And I still use MYOB in my own business because I've grown up with it and I understand it. But definitely for, recommending to clients and that, I guess that architecture of that software in terms of its add-ons, it's superior in my view, and almost universally, not universally all of our clients are on it, but as a platform, it's by far the most prevalent, and I do think it's the strongest. It's not foolproof though, so we do see a lot of mistakes being made in Xero and dirty files, and the program has never been super robust in terms of warning people when they're doing the wrong thing. So as a person with bookkeeping experience, I know when something is processed incorrectly. I just need to learn how the program will handle the actual processing of a thing. But we've seen plenty of files where a client without that bookkeeping expertise, they'll use the program and the program will be telling them that they're doing everything correctly, but actually from a bookkeeping perspective in the background there are errors getting made. So there's still a bit of an education piece around Xero, but it's far better than it was when it first came out. I think it's a market leader now, quite clearly, and that's what we kind of recommend. Now, in terms of all of the add-ons though, we're more interested, whatever works for the client, we're more interested in the actual Xero architecture, so long as that's in play. But we've got a lot of freelancers who that's a bit of overkill for them in the beginning. So we've got a cash book that we developed many years ago that's just a very simple kind of cash book template. That's all it is, but it's just something where you can stick it in front of a client and just go, if you can just put in the data into this, the spreadsheet will do the rest, and it can take account of GST if they get to be GST registered. So we've got GST and non-GST registered sort of versions of it. But a lot of the time that's enough for people in the early stages. And I think for people to learn all of those good habits and principles in a manual sense, is actually not a bad thing, because once they graduate to having software help them with that task, they've got a much more fundamental understanding of what that software is trying to do.
Yeah.
They've usually got a bit like, I've got a client on our books who started like a tattoo business, and they started on that particular Excel program. Full company, you know, wages of the two directors, like a lot of stuff going on, like straight into, you know, the business running, and having to reconcile bank accounts and all that sort of stuff. Probably the sort of textbook case for just getting into accounting software straight away. But they were just more, they didn't know. So they were more comfortable with just doing Excel, doing it manually. And that business actually lasted on that program longer than I thought it would.
Wow.
But at the point where they were ready, it was a bit too manual.
Yeah.
We're ready to jump into a program. I found that that client was able to move into that program so much better than the quality of the files that I usually see, where people have jumped into that program straight away without the underlying knowledge of what the program's architecture is in the background. Because when this client moved into it, they knew that all of the interface was different and easier for that matter, but they knew fundamentally what the program was doing in the background because they'd done it themselves, which meant they really just didn't make any mistakes from day one using it. So it was just such a more seamless transition into using the software. So I'm a big advocate for don't be scared about manual systems. If you want to have manual systems and keep it simple for where you're at, just do it. But there'll come a time when, you know, if the business needs to graduate, you'll probably be feeling it as well. Like you'll know it needs to graduate, which is great because it means you're already on board with that development, and the importance of learning the program properly so that you just don't fall into any traps. But mate, we are now in the world of AI, and you know, like Xero is launching all of this sort of stuff. So there's increasing tools where all of this sort of architecture is moving towards, you know, artificial intelligence helping. So where it all lands, let's see. But it, you know, I'm old enough to have seen all of this sort of tech come through, right? So my sort of view on it is, in the beginning stages, it's often not that great, and it needs to be tested a lot more rigorously than the industry tends to. I think they really release a lot of products onto the market and do their testing for nothing through the workplaces, and they just do trial by error rather than spending proper resources to get things tested properly. That's my personal opinion to anyone tech industry related that might be listening to this. But they get better, they improve it. The better companies do improve it. And I mean, where we are now versus where I was in the beginning, I mean, it's a bit of a no-brainer, really. You know, some of my staff might argue that point. It's like, oh, you're much more philosophical on the podcast to people. You're not like that in real life when you're whinging about it.
Yeah, but you know, good days, bad days.
I'm also 48, so you know, I'm that close to probably being a boomer that it's a generational thing. You know, the younger ones have far less problems with it.
Oh,
Yes,
look.
but the way we will present our thoughts, you know, publicly and privately are very different.
No, look, everything is headed in that direction, right? And AI will bring its own issues, or it won't. It will help or it will hinder. We've just got to wait and see. Hopefully help in anything outside of the creative industries. But yeah, I'm sitting here now being like, what do I need to go home and do?
Oh, by the
I
way,
need to do
that's
this.
Xero.
Yes,
Yeah.
Xero, not Z.
Yeah, not a Z, it's an X.
Not a Z. I've got a to-do list probably
You do
for
have
days.
a to-do list. We will also write in case you didn't take notes,
Yes.
little format on this, and to just bullet point everything.
Yeah.
To make sure that it's all there easy.
Yeah. It's good. My head's kind of spinny, but in a good way. Because I'm like not even
You're
half, I'm
in
not
it.
half, I'm like on the right track. You know,
Yeah.
like I'm not perfect.
You're in ideas mode. You're in the mode.
Yeah,
of,
I'm like,
I now want to change this, and I want to
okay,
put
now I can do this, and that will
in.
make life so much easier. And yeah,
Absolutely.
it's been very helpful.
Yeah, it's worthwhile. I really do think if clients take on board this particular aspect, I know it's not the most glamorous part, but it is practical. And yeah, once
Guys, save yourself the bills. Just save yourself. Yeah.
Yeah.
and the angst
Yeah.
is what I think it is for me after all these years seeing it. I just see too much angst, and that's what the angst is. It's the angst is not that they've got the tax to pay. It's just that they didn't plan for
They
it to
weren't
see it
prepared,
coming.
yeah.
That's really actually what the angst is at the heart of it. It's the clarity. And all it's there. You know, you don't have to be a super expert at it, but we've got clients, and some of them have got in-house divisions that do all this stuff. Some of them have got bookkeeping firms that look after it.
Yeah.
But I've got other clients where they want this clarity themselves,
Yeah.
so they're not really interested in a bookkeeper. So they want to learn how to build Xero and build the rules.
Yeah.
And they're happy to be educated, and I'm happy to teach them. And so I've got clients where there is no bookkeeper in the middle of the client and myself, and the client just takes the file to a particular point,
Yeah.
and that point as well can get better and higher
Yeah.
the longer the relationship's in play, and it just gets fine-tuned. But yeah, if they're so inclined, then they'll just take control and take the file to the point, and then they'll be able to say, well, okay, maybe each quarter with the GST, for instance, it'll be I'll go in, and the transactions that they know or don't know are the ones that are left for me, and there'll be notes just there. Matt, this is sort of like this.
Yeah.
I'm not sure where to code it.
Yeah.
But you know, so they don't waste all of this time trying to
Yeah.
necessarily do it, because they know that I can come in and go, oh, that just goes there, that's fine. Or I'll build a rule so that the next time it's going to be a repetitive transaction,
Yeah.
the client will kind of just come in the next time, and where they're kind of looking at all of these rules in play that are saying, hey, here's this transaction, we think that's usually going to this particular expense code, is that right or not? The client will be used to seeing those things and ticking them off. So the accountant can come in with those adjunct things and find ways of maybe building those rules, so that the next time the client comes in, the rule is now in place where they can just go, oh, there's a rule now. And they'll know that that's been built by me.
Yeah.
The only two people that touch the file are them and myself. So they know where it's come from.
Yeah.
You know, so they can trust that.
And
they
you
just
have
keep
the ability
moving.
to do that because they've already learned and they're putting all that work in. Like prior to that, they're doing everything else that they know, and then there's this little bit that they don't know that they can take to you.
That's right.
And be like, hi, I need help with this one, instead of I need help and you're having to go through every single part of it. They've done this bit. They've learnt that bit from you already.
That's
You're
right.
just informing on that next step.
Yeah.
Yeah.
Yeah. It's the ideal thing to do, because I mean, we all live in a world with all rising costs, and you know, I mean, I see it. My charge out rate is not what it used to be once upon a time. I see it in the costs that my business has got. So, you know, and with all the software there, and with that information sort of being available more than ever, you don't want your accountant actually spending time doing all that. I mean, I love still doing that stuff, in my own time and space because it's my business, and there's still that part of me that loves just getting in there. I don't mind doing that. I'm trained to do it, but goodness me, if I was paying
Bang for
someone at
buck,
that, it's easy for me to say that, it's just my time. But
Yeah.
if I was paying someone else that hourly rate to do that sort of work, I don't know. I think it can save you cost, but it's more than just the cost saving. I mean, I know that's very practical, it is, but the bigger thing is just the skill set that you build around it as a business owner. I think it's got far more.
It's about taking ownership
say.
of your business. I want to know where my business is sitting. I want to know what my business is spending money on. I want to know what my business looks like. it's mine. I'm building this thing. I want to make sure that it's being run to its best, that it's like doing all the right things, it's ticking the right boxes. I'm not going to get in trouble. I want to know eyes on everything. So, yeah. No, thank you. Thank you so much for coming in.
We could talk to you for hours.
We really could.
But we got to get you back to work.
I know you have a wait list.
Yeah.
Yes, we do.
But if people want to find you, where can they find you?
Yes, we're in Fortitude Valley, Brisbane. Creativecrunches.com.au will get you through to the webpage and where to reach us. Electronic mail, phone lines, we can do all that.
The whiz bang shebangs.
Yeah. I'm actually not on social media. I'm a real kind of social media ghost.
You have a wait list. You don't need social media.
Yeah. Well, I mean, the thing is, it's like Australia-wide, there are specialists, but there's not many of us. Wish there was more,
I really searched.
So I mean, they're out there, but I dare say that most of those firms are probably in the same boat that I'm in. So it's not, the drama is not demand for the service. I think there's lots of creatives out there that need the help.
Yeah.
The biggest thing for accountants really at the moment, and this is not unique to me at all, is just trying to find the skill set, the staff. It's a common sort of thing across the entire economy, but accountants are definitely in very short supply. The ones that specialise in tax are even rarer, and the ones that want to choose to do tax as a specialisation and then go niche with arts and creatives. It's a super rare hen that I look for. It's a super rare hen that actually works in a place like mine as well. Like it goes both ways. I'm looking for someone super rare. But for many accountants, like what I do is not what they're on about. If they want to work on massive financial statements for BHP in PricewaterhouseCoopers, then that's not what I do. So, and the clients that they would get exposed to are a very different breed, so that's the biggest sort of struggle. So I mean, look, I do say to all the listeners, you do want to try to get in to see a specialist in this field, because I do think we're worth it. From what I hear from the gripes of people coming in from outside that sphere, the biggest drama is just trying to deal with the demand and find those people. So I guess
if you're a creative looking to make a pivot and you really love a tax code,
that's
you're
very
in
true.
Demand.
Yeah, that's actually very true. And one of the people that works for us literally did that.
There you go. Great pivot to make, and you're still in the industry.
Or if you know someone that is just motivated by all that sort of stuff and wants to work in that particular sphere. Like, those people are around. Sometimes the accountants don't necessarily realise that they're specialists, so they're sort of unhappy in their current role and don't think...
Spread the word, guys.
But it is worthwhile. But I mean, if you can't get into like books or see someone or whatever it might be, I mean, even what you two ladies are doing, like, this is about just trying to get the information out so that people can arm themselves with what they do need to know. Hopefully there's a little bit of information there for them to go searching, put some things in place, get some discipline. And, if there's a topic that's been raised today, and you can talk about pay as you go, we haven't really gone into any of this in sort of detail, but like non-commercial loss provisions, income averaging, Section 405, you can just Google that stuff. You can chat GPT that stuff now, to be able to latch onto places in the internet that have got this information, whether it's ATO web pages, or sometimes you'll do a search for a particular topic, and some of the stuff that will pop up might be an article that's been written by a tax law firm. I even find stuff like that. It's like, oh, look, that's what I want to hear. I want to hear if there's an issue that I'm trying to research and I've sort of exhausted what the ATO as regulator have to say about it, but I want to go deeper. I'll fish out the legal papers that have been written on it to sort of find out people that are actually running cases on this stuff at the pointy end. Where are they on it? Where are the cases being run, and are those cases sort of falling on the side of the taxpayer or the ATO? I don't
Seek
profess
the
to know it.
information.
Yeah,
Like,
just seek it.
Really, yeah.
Yeah, seek
I
it
love
and you
that.
shall find.
I do feel like there will be a part 2, maybe a part 3, maybe.
Yeah, if you're willing to come back, or any of your employees want to come back, I just think it's so important to have
We'll
these
delve
conversations.
into some deeper
and-
stuff.
Yeah.
Once we got the basics down, team, we'll start there.
Yeah, there's your homework, guys. Go
Yeah.
and work on that, and then we'll work on the
Then
next
we'll
step.
go next. Yeah, look, it's a big topic,
It is. a
but
big
I'm
topic.
really glad that we have
Yeah,
started
we
it.
really appreciate you coming on board. Thank you
Well,
for coming to chat to us.
I'm very appreciative of the opportunity to be involved and support your podcast
Thank you.
and hopefully provide something useful for your listeners.
Oh, hands down. You have hands down done that, trust me. Where can they find us, though, if they want to tell us what they want to listen to next?
I mean, you can email us, hello
Yeah.
at takenotespod.com.
It's hard. I trip over it every time.
Takenotespod.com.
Mhm.
You can find us on Instagram at
Yeah. Take notes.
notes.
.pod.
.pod.
Same on TikTok.
You can find us on the Tickety Talk. Yeah, just reach out, guys, and we'll try and source as much information for you as we can.
Yeah, and there's a few episodes now in the bank for you to listen to if you haven't listened to any previous episodes. If this is the first time you're joining us, thank you so much.
We're in all of the podcast streaming places and on YouTube.
It's going to be great.
Go and have a
So
look.
let us know, because we want to be able to create resources that you need. So any topic, shoot us a message, DM us, whatever it is. But
Thank you.
I have some things to do.
Katie's to-do list in her brain is just
And
populating.
I'm like,
as
okay,
we
we're going to
speak.
start this, we're going to go there, and we're going to, what a murder board is happening for my tax year.
Sorry, Britt. Sorry, Kristen.
It's okay,
No,
it's
this is
perfect.
great. Yeah,
It is
truly.
perfect, because I do feel like,
And I'm
no
gonna
matter
give my little logbook a little like pat of
yeah, I'm going to
happiness
have to
that
buy
we've
it.
done
My
that
dad's
thing.
going to be so happy that I bought a new logbook. But I do feel like no matter how prepared you are, tax time is scary. So thank you for kind of
Make it less
ghostbustering it
scary.
for us.
Yeah.
You're most welcome.
Yay for knowledge.
Yay! Okay, guys, see you next month.
Bye.
Bye.